this management accounting, remember so far we have done many things. We've done how to do stock levels, all right. We've done the famous EOQ, yeah. And then today, we are going now to move to the next level, where basically I look at what we call economic order quantity, but now this time around, whenever we are given ranges, whenever you are given ranges. Yeah, so this is what I want us to look at today. Great. All right. So then I'm sharing this handout with you here. Yeah. So it is economic order quantity, economic order quantity with quantity discount ranges. Quantity discount ranges. So quantity discount ranges, remember, is where the examiner tells you that if you procure goods between this and this, you get like 10%. If you procure goods between maybe 21 to 50, you even get more discounts. So when you have these kind of ranges, then what are you going to be doing in an exam situation? That's what we want to look at today. Yeah, quantity discounts in situations where those discounts are coming in form of ranges, So you're told here, when discounts are offered, the purchase price and the holding cost both will change. As usual, of course, the total cost formula will always remain the same. As usual, our total cost formula will remain the same. To get total cost as usual, we normally take the annual demand times the price. Yeah, and then of course we talk of what here, D over Q. Yeah, CO. Yeah, and then we have in this case here plus Q over 2 multiplied by what here? Multiplied by HC, multiplied by HC, multiplied by HC, like that. Yeah, so anytime we are talking about discounts, we expect, of course, the price to change. And in most cases, because holding cost is given as a percentage of the buying price, then we expect holding cost to change as well. So, ladies and gentlemen, this is what we have here. So we are told here, procedure for each price bracket, calculate EOQ using that bracket's cost. If EOQ is within the range, we say it is practical, it is feasible. You evaluate the total cost. If EOQ, is less than the bracket minimum, use the lowest quantity in that bracket. And if EOQ is greater than the bracket maximum, you ignore it. And then you shall compare the total cost across brackets, and we shall always choose the lowest. For us to understand what you're talking about this afternoon, ladies and gentlemen, I would want us to look at an illustration, which is the question that was tested in April 2025, question number 4C. April 2025, question number 4C, for you to be able to appreciate what we are talking about this afternoon. Yeah, I'll be able to share the handout later. In your paid groups. I always like sharing the handout to the paid group because I put in lots of efforts to come up with this kind of notes. So I don't want to give it here because there are some friends of ours that I would want them to join our classes to be able to get this kind of what here, this kind of great summarized notes. You can never go wrong with them. So April 2025, question number 4C, we are told Yusufu Enterprises uses EOQ to establish the optimal reorder quantity for purchasing the main raw material used in the production process. The farm has been approached by an alternative supplier who would be willing to offer the following discounts. Yeah. So we have, you can see now, these are ranges: 0 to 199, 1%, 200 to 499, 3%. So you can see the ranges. Information regarding the current inventory cost is as follows. Holding cost per unit per year is approximated to be 10% of the purchase price. We have the order cost of 2 per order. We have our annual demand of 15,000 units, very important. The purchase price is 15. And then we have the current EOQ is 200 units. The current EOQ is 200 units. So they want us to determine the optimal quantity to be acquired. So this is really an easy examiner. So what you're going to do, first of all, is to prepare a table where we write down all these ranges. Let's write down the order ranges. We write down the order ranges. So it is 0 to 199. I want to map my board very well. So we have the order ranges. So the order ranges, the order ranges, we have here 0 to 199. Yeah. Then we have 200 to, if you look at that question, yeah, to 499, to 499, 499. Then we have, ladies and gentlemen, 500 to 699. Yeah. Then we have 700 units, in this case here, to infinity, 700 units or more. 700 units or more. So that is the first thing you do, ladies and gentlemen. You shall be able to come here and write the order ranges. Those ranges, they are very important. After you do that, I would want you straight away, for each range, give us the price that you're going to incur to procure these goods. For each range, give us the price. Remember that the normal buying price is 15. The normal buying price is 15. The normal buying price is 15. That is the normal buying price. But should I buy goods, in this case here, falling on this range, then I'll get a 1% discount. I will get a 1% discount. Getting a 1% discount is akin to buying this at 99%, because 1% will disappear. Yeah, if I buy within here, 1% will be struck off my price. So 1% being struck off my price means that I will procure this at 99%. Then you come to the second category, ladies and gentlemen. The second category, they have told us the discount. The second category, they have told us the discount. They have given us the discount. So you can see the second category, it is 3% discount, 5%, 7%. Very easy. Very easy. So the second category, my friends, if I come to procure goods from these people, and then I buy orders falling in between here, 3% will be knocked off my price, so I'll purchase them at 97%. Here, 5% will be knocked off my price, I'll purchase them at 95%. This one, a whole 7% will be knocked off, I'll procure them at 93%. You simply take 100%, you less the discounts. So then, is there a good student who is able to give me these answers pretty fast? A good student who is able to give me these answers pretty fast? Yeah, according to Mercy Yator, she's getting here 14.85 Kenya shillings per unit. Yeah, then we have, in this case here, Irene has actually given me all of them. Yeah, 14.55. You can see it is reducing because it's bulk discounts. It's bulk discounts. 14.55. Is it 15 or 1.5? I'm not sure. How is it written? Maybe I picked this with an error. Just check your past papers. Check your past papers. Your past papers will be much better. I could have typed this with an error. I used here 15. Those students who have their past papers, is it 15 or 1.5? It's good to work with what is in the past papers. But nevertheless, the concept is what is more important, right? The concept is what is more important. So it is 15, eh? It is 15. You can see they're confirming even from the past paper. It is 15. Thank you so much. Which question is this from Joyce? Joyce, this is April 2025. Yeah, this is April 2025, question number 4C, yeah? April 2025, question number 4C. So then are you able now to give me all the other figures now that you have confirmed? Now that you've confirmed 15 times 95%, 15 times 95%, that is the same as 15 times 0.95, 14.25, 14.25. And then we have now 15 times 0.93. 15 times 0.93, we are getting 13.95. As these prices change, so will our holding cost do. Our holding cost will also change. Our holding cost will also change. So then are you to give me these holding costs? Remember, holding cost, they have told us that the holding cost is 10% of the price. 10% of the price. So it will be 10% of this. Yeah. 10% of this. 10% of the same. 4.55, sorry. 14.25. 10% of 13.95. So please give me these values, if you don't mind. I know this will be 1.485. This will be 1.455. This will be 1.425. This will be 1.395. 1.395. Yeah, please confirm whether those figures are correct. Confirm whether those figures are correct. And if they are correct, then I would want us to go ahead and get EOQ. Let's get EOQ for each class. Remember, EOQ is 2 DECO divided by HC square root. 2 DECO divided by HC square root. That's how we get EOQ. It is 2 DECO, yeah, divided by HC square root. Yeah. So are you able to see the annual demand in this question, ladies and gentlemen? Are we able to see the annual demand? Are we able to see the annual demand? The annual demand in this question, yeah, it is given to us. The annual demand is 15,000 and the cost per order is 2. Cost per order is 2. Cost per order is 2. So then I will come here and do my root. Yeah, twice 15,000. Cost per order is 2 divided by holding cost of 1.485. Give me a figure. Give me a figure there. So according to 𝗦𝗘𝗣𝗧𝗘𝗠𝗕𝗄, it is 201. 201. Yeah, you can write whole numbers here. You can write whole numbers. So according to your TOR, it is coming to 201. 201. Can someone else confirm? Yeah, also Irene has been able to. So come and do the same. Yeah, my good students. It will be 2 times 15,000 times cost per order is 2. You divide this by the holding cost. Holding cost is 1.455. Whatever answer I get, I take the square root of that. Whatever answer I get, I take the square root of that. Yeah, according to Irene Onyango, she's getting 203. 203. Thank you so much. 203. Mercy has also confirmed the same. So again, we shall do the same. So come here. It is 2 times 15,000 times cost per order of 2 divided by 1.425. Then at the end of the day, what figure are we going to get here at the end of the day? Yeah, at the end of the day, what figure shall we get there? Millie Kaku is getting 500. I think that's really too high. It can't move like that. Yeah, 5, isn't it? Millie, just check again. It can't move like that. That is too high. That is too steep. That is too steep. And then, ladies and gentlemen, in this case here, we have the last one. The last one. So in this case here, we have 2 times 15,000 times 2 divided by 1.395. So please tell us in this case here, what will this EOQ be equal to? So this is 207. Now, my good students, I'm so sure that this table already, even on your books, the table is full. Have you been able to exhaust your entire table? Have you been able to exhaust your entire table? Or do you still have some space here? Do you still have some space? I doubt, isn't it? So then what you do, you will come and make table 2. So you make table 2 for your case, you do table 2 down here. Table 2. For my case, I will just continue with this and call it table 2. How do I do it? When you're doing the second table, remember, you must, in this case here, give us the ranges. So you're doing the second table, you must give us the ranges as usual. You must give us the ranges. So these ranges, I hope now you're writing your table 2. So we have here the calculated EOQ. The calculated EOQ, yeah. So the first one we got here was 201. 201. We have 203. 203. We have 205. We have 207, like that. We have 207, like that. We have 207, like that. And then, of course, now we have what we call the feasible EOQ. The feasible EOQ. Let me know, ladies and gentlemen, once you are able to write your second table down there up to here. Let me know once you're able to write your second table up to here. Done, eh? Done, done. Thank you so much. So the feasible EOQ, feasible means practical. Feasible means practical. Feasible means practical. Then remember our practicality, we are using the 3 rules. That if the calculated EOQ is more than the range, like 201 is higher, yeah, it's above the range. If the calculated EOQ is above the range, what should we do with that EOQ? If it is above the range, you ignore. So this one, we ignore. Yeah. Remember, if it is above the range, you ignore. If it is below the range, you evaluate the total cost of the lowest range value. If it's below. Yeah, let's move slowly. Let's move slowly. So remember, like this 201 is more than this range. You can see 199 is the higher class limit. So 201 is more than the 199. The rule is you ignore. How about 203? Where is 203? Where is 203? 203 is within, isn't it? Is within this class. So if it is within the class, what are we supposed to do? 200? No. It's within the class. If it's within the class, lowest, no. If it is within the class, you evaluate what you have gotten. If it's within the class, then I mean, you are in a good assembly. So in this case here, the Q to be evaluated here, or the EOQ to be evaluated here, is that exactly 203 figure? 203 figure. Evaluate using that EOQ. Yeah. Like now 205. Where is 205? 205 is below. So when 205 is below this range, when 205 is below this range, what are we told? This is a dwarf. So for the dwarf, what do? We evaluate the minimum quantity here. So in this case here, the EOQ to be evaluated, because now you are a dwarf, you are below, you shall evaluate 500. You evaluate the minimum here. The same is applicable to 207. It's less than. It's a dwarf. In comparison to this class, it's a dwarf. So in this case here, the EOQ to be evaluated, is 700. The EOQ to be evaluated is 700. The EOQ to be evaluated there is 700. Let me repeat this. Let me repeat this. And I will repeat this by reading this handout. I will repeat this by reading this handout that we have. Yeah, remember here, if E or Q is within the bracket, it is feasible. If E or Q is within the bracket, it's feasible. It's feasible. Take it the way it is. If this EOQ you have calculated is within the bracket, it is feasible. Take it the way it is. That's rule number one. That's rule number one. Rule number two. Rule number two. Rule number two. Okay. Rule number two here. If the EOQ is more than, let me read this. If EOQ you have calculated is more than the bracket maximum, is more than the bracket maximum, ignore it. Ignore the whole thing. Ladies and gentlemen, these are very simple thing. Don't complicate life. Like now, this 201. Are you seeing that 201 is more than? Because if you draw a range, I mean, 0, 199. Yeah. Where is 201? It's more than. So 201 is more than 199. And if it is more than 199, that means, of course, in this case here, that cloth is really smaller for you. This class is really smaller for you. Ignore it. You ignore it. So whenever you get, in this case here, number, EOQ being bigger, what do? That's not your class, ignore it. It's not your class, ignore it. And then we have been told, ladies and gentlemen, whenever they calculated the EOQ is less, whenever they calculated the EOQ is less, like now this 205 is less than the 500 here. It's less. The concept of dwarfism. So if it's a dwarf, then what do? The feasible one will be the smallest number here. So the EOQ, yeah, we simply uplift that dwarf to reach here. So the EOQ will be 500. Like now 207 is less than the lowest here. So the dwarfism concept will be applicable here. So the EOQ will be 700, Feasible. So first of all, before we proceed, are we okay now up to here, all of us, my sons and daughters? You guys are young. You guys are my sons and daughters. How we come up with this feasibility test, that is the most important thing. And then now you'll be able to come and calculate for us the total cost. You'll come and calculate for us the total cost on the same page. The total cost. Our total cost is 𝗦𝗘𝗣𝗧𝗘𝗠𝗕𝗏 party. The late 𝗦𝗘𝗣𝗣𝗧𝗘𝗠𝗕𝗏. His party was DP. So you take DP, ladies and gentlemen. Just a moment. Yeah. Just a moment. I do some abracadabra here. All right. So we shall take DP. Yeah, DP plus D over Q. Core plus, ladies and gentlemen, Q over 2 HC, like that. Q over 2 HC. So anytime now you want to get the total cost, that will be the formula we shall be using. Yeah, D is the annual demand. If you missed our first initial classes, D is the annual demand. This is price per unit. Yeah. Quantity, the EOQ. CO is cost per order. Yeah. HC is holding cost. So we start with the first class. The first class, I will not calculate its total cost because you've told me to ignore it. The first one, I will not calculate. The second one, can somebody in this case here remind us for the second one, what was the annual demand? Is there somebody who is able to remember the annual demand was 15,000? Annual demand is applicable all through. Annual demand is applicable all through. From this question, it's 15,000. So 15,000. In this particular class, from your table 1 above, what is the applicable buying price from your table 1 above? Second class, is there somebody who is able to see the applicable buying price? From your table 1 above, second, 14.55, right? The second one is 14.55. Plus the D. The D is 15,000. The D is 15,000. All over EOQ, which is feasible, that is applicable here is 2 or 3. If I remember very well, the cost per order, what was the cost per order? Was the cost per order 2? Cost per order. Was the cost per order 2? Cost per order was 2. Thank you so much. plus the same Q, which is 203, divided by 2. Please make reference to your table 1 above and read for us the holding cost per unit per annum. I'm so sure it must be 1.455, like that. I'm 100% sure. So can somebody in this case here give me that total cost? Evaluate that total cost. Using your calculator, you will say 15,000 times 14.55 plus 15,000 divided by 203 times 2 plus 203 divided by 2 times 14, not 14, but times 1.455. And then you give me an answer. Somebody give me an answer. So according to 𝗬𝗘𝗧𝗘𝗠𝗕𝗘𝗥, we are getting 223, 218. I don't know who's telling me the truth. 218. Let me wait for another student. Yeah, always ensure you try. Just try. Because when I do the second example, everything will fall in place. Everything will fall in place. So remember, what are we doing? 218, So 218 has gained momentum, and with your permission, I'll be able to rub this because of what here? My space. My space is not that big. My space is not that big. Please, for management accounting, even if you're not following, ensure that you are punching the figures in your calculator. That way you'll be able to know a lot of management accounting. So we have 218, 546. 218, 546. Then we go to the second evaluation of this feasible quantity. The annual demand is still 15,000. Yeah. For the second class, this one, actually third class, what was the applicable price? Remember, this is a first class, second, third class. Go to your table 1 above and give me the applicable buying price for the third class. For the third class, I'm really waiting to hear from you. For the 14.25, thank you so much. 14.25 plus D. D is still 15,000 over Q. Q, which is 500 now, times cost per order, which is 2. Plus, in this case here, that same Q, 500 over 2 times the holding cost. Please go to your third class from table 1 above. You'll be able to see that the holding cost is 1.425. Is 1.425. Is 1.425. So can somebody in this case here take up their calculator? They say 15,000 times 14.25 plus 15,000 divided by 500 times 2 plus 500 divided by 2 times 1.425. And then you advise what figure are we getting as our total cost? What figure are we getting as our total cost? So according to 𝗬𝗘𝗧𝗘𝗠𝗕𝗏, we're getting 214, 166. 214, 214, 214, 100, 214, 166. Also, Melikaku has been able to confirm. So please go ahead and also evaluate the EOQ of 7, the fourth class. So the fourth class evaluation, we're using this formula, 15,000. It's only the price in the fourth class from your table 1 that I cannot remember. That I cannot remember. That buying price from your table 1 above. From your table 1 above, what was the buying price? 13.95. 13.95. 13.95. Ladies and gentlemen, plus, listen here. The annual demand is 15,000. The feasible EOQ for this class is 700 times cost per order, which is 2, plus 700 over 2 times the holding cost of your fourth class. If you go to your fourth class, table 1 above, you'll be able to see the holding cost. I know it's 10% of this, which is 1.395. So is there someone again who will be able to really work that out? Everybody should be able to work out. Thank you, Quinta. Thank you, Millie. Thank you, Quinta again. 209, 781. 781. So we have here 209, 781. If I rub, I hope I can rub this. I hope I can rub this. 209, 781. Thank you, Mohammed. Thank you, Mohammed. Mohammed is a new student. Yeah, he's working very hard. 209, 781. I mean, is that the last? Yeah, that is the last. That is the last. That is the last class. So remember, we make decisions on the basis of, the lowest cost. On the basis of the lowest cost. So amongst the three costs, remember, don't tell me this is zero. This is not zero, this is ignored. So there are three. Ladies and gentlemen, there are three. So when there are three like that, which one is the very least? Which one is the very least? The last one, isn't it? The last one is the least. So this is the least. So this is the least cost. Least cost is also known as the optimal cost. Optimal cost. And therefore we advise the company to procure 700 units at a time, i.e. the reorder quantity is 700 units. The reorder quantity is 700 units. The reorder quantity is 700 units. Omar wants me to repeat the last one. Yeah, always feel free to ask questions. So are we in agreement that, of course, the board is not very clear here. The board is not very clear down here. Yeah, lowest bid. The lowest bid, yeah, right. I like that. So we have here the concept of the lowest. Yeah. So first of all, before I repeat, I would want to know whether everybody has been able to write this conclusion. We advise the company procure 700 units, this one here. Yeah, at a time, i.e. the reorder quantity is 700. Every time we are ordering, we shall order 700 units. For the sake of Omar, we shall repeat. For the sake of Omar, we shall repeat this last one here, this one here. Remember, the annual demand, and I'm following this formula. The annual demand is 15,000. The price per unit, please remind Mwalimu, what was the buying price per unit given on your fourth class? Given on your fourth class, what was the price per unit? What was the price per unit? Please don't get tired. We shall not get tired for students who are asking questions. We shall help them. That is the essence of teaching. So Daniel gives me that at this class, fourth class, the price was 13.95 plus this 15,000 over Q. Q in this case here, which is the EOQ, the 700, times cost per order, which is 2. Yeah, plus that Q over 2 times the holding cost, it was 1.395. I'm so sure, Omar, right? You should come and just take your calculator, say 15,000 times 13.95 plus 15,000 divided by 700 times 2 plus 700 divided by 2 times 1.395. 1.395. So Omar, if you do that, you'll be able to get that 209,781. 209,781. Now, ladies and gentlemen, please listen and listen to me very well. Listen to me very well. Remember, we have a current EOQ. In this question, we have a current EOQ. I hope, Omar, now you are a bit comfortable. You should be comfortable. Great. Thank you so much. Yeah. So remember, we have current EOQ. What is the current EOQ? What is the current EOQ? Can somebody read from the question? What is the current EOQ? Can somebody read that from the question? It is 200. Remember, it is always important for you to get the total cost of the current EOQ. However, this is only done if the current EOQ does not attract a discount. The current EOQ would have put it somewhere here. I would have put it somewhere here, and I would have even gone ahead to get the total cost of the current EOQ. I repeat, the current EOQ is only evaluated if it doesn't attract a quantity discount. If today I walk to this shop If today I walk to this shop, ask them to give me 200 units at a time, ask them to give me 200 units at a go, what do you think? If I ask to be given 200 units, ladies and gentlemen, or they can't see, they can't see. Are you sure? Or the last part, which part is that? Which part is that? I thought you guys wrote everything. I thought you guys wrote everything. I thought you guys wrote everything because now I've finished the question. I've finished the question. There's nothing to be seen here. So, sawa, you don't have to see now. If, ladies and gentlemen, in this case here, we go to this shop asking to buy 200 units. If I ask to buy 200 units, will I be given a discount or no discount? Will I be given discount or no discount if I ask for 200? Somebody saying no discount, no discount. Me, I think I will be given a discount. Do you know why? I'll be given a discount because where is 200 in this class? 200 actually I'll be given. Is it a 3% discount? I will be given a 3% discount. I will be given a 3% discount, isn't it? So this is EOQ with a discount. So the EOQ here is attracting a discount. And because it is attracting a discount, I shall ignore it. The current EOQ, if the current EOQ is attracting a discount, it shall be ignored in our calculations. We can only calculate the total cost of the current EOQ if upon acquiring this current EOQ units, I will not qualify for any discount. And I will be able to demonstrate this using a past paper question. But for today, I believe you guys have been able to get this concept of what are the ranges before I complicate issues. Yeah, I hope you've been able to get this concept of ranges, and then I'll be able to give you one more question as an assignment. And then, of course, I will be able to do what you to do that question to now affirm that everything is okay, So please don't let me down. Should they bring this kind of a question? Of course, at your level, they can't even complicate. At your level, they'll give you straightforward questions. Now, ladies and gentlemen, remember you're doing what we call cost accumulation, which is topic number 4. This cost accumulation, number 1, I taught you the concept of stock levels. Do they still remember those formula of stock levels? Do they still remember the formulas of stock levels? Yeah. Because stock levels, rolling, miniskirt, etc. I'm not so sure whether there's anybody who will ever forget that kind of what here, a concept, especially if you have been taught by these great ninjas. Great. From there, we've been able to do EOQ question, normal one, and the EOQ with discounts. Now we have finished that area. Now, ladies and gentlemen, I would want us now to move to the next level, which is valuation of materials. So mention there, valuation of materials. Before we go to labor and overheads. MA is the sweetest paper in CPA, the best paper in CPA. So valuation of materials. So valuation of materials, my good students, this is what we have here. Valuation of materials, or valuation of inventory, or valuation of stocks. Yeah, so there are 3 methods used for valuation of closing inventory in management accounting that you need to be aware of for the purposes of passing your exams. You can either value your stocks or raw materials using what we call FIFO, LIFO, or weighted average method. And we shall start with the FIFO. FIFO is fast in, fast out. Fast in, fast out. This method assumes that materials are issued out of inventory in the same order in which they were delivered into inventory. Yeah, this method assumes that materials are issued out of inventory in the same order in which they were delivered into inventory. Ladies and gentlemen, fortunately, very luckily, I've practiced management accounting and very luckily, I've practiced management accounting in international organizations. This mwalimu has ever been lucky. I've always worked with international organizations all my life. Of course, apart from teaching, but even RCM now is an international organization. It's only at the beginning of this year that we looked at the numbers at RCM, number of students, they are really growing. And then I said, for how long will I continue working? Let me just come home here. Let me come home here and then do what here? We manage the school. Yeah. Now, when it comes to this management accounting, in terms of stores, you are buying your raw materials. These raw materials you are buying, they normally come in batches. You'll ask, in this case here, these raw materials from supplier one. Supplier one delivers these raw materials, say at 100 Kenya shillings per unit. Oh, for governor, wow, great. I think I'm beyond there. I'm beyond there. I'm beyond there. If I just work a little bit harder at RCM, I believe even what I'm doing is more impactful than the governor, than politics in Kenya. You see, RCM now is a school with about 4,000 students in total. If you do your calculations, I think I'm better off here. I'm better off here. Whatever salary I'll be able to draw out of this place is good enough for my young family with 3 kids. 3 kids. But of course, those of you who are aware of my story, I'm in the process of also adopting 2 kids. Yeah, I want 2 more. I think we played around. We thought that older school that you need 2 or 3 kids. No, the more the kids, the better. The more the kids, the better. So we are in the process of adopting 2 kids legally. But we shall discuss about that later. Thanks for those great wishes. Those great wishes. Yeah, but I prefer teaching. You know, teaching, there is not even a single person who will even know that I have some little monies. So whenever I go for any kind of contributions and I contribute 5,000, people will say, hey, the teacher has really given a lot of money. But if I were to be a governor contributions, these guys would want to be paying like $500,000 to them. You become like a slave of everybody. Yeah. So to me, it's about teaching. Teaching is very good, but thank you for your good wishes. Now, when I was doing management accounting for these international organizations, running the stores normally is a funny thing. So you'll have a big warehouse. This could be a big warehouse of, for example, clothes, which you're buying from suppliers, and then you resell them. So there are people who bring these clothes at, say, $100, yeah, per piece. Now, when you go to order again, another batch, you may not get that supplier who exactly delivered these clothes to you at 100. You could get them at 101, at 102. So you see, now I will be having, even the same supplier, prices keep on changing. At times you can get even a discount. So you'll be having a batch. One batch, the first one came in at 100. Yeah. So in this case here, for example, we acquired 100 clothes, each at 100. So this is batch number 1. And then we have another batch, which came to the stores, 1 or 2 clothes, but these ones here, we got them at 101 per batch, 101 per unit. Ladies and gentlemen, they are inside the store. So in this case here, now we start reissuing them. We start issuing them for selling. So when they come to the store, of course, they will mix up. It will be very hard for you to go and say that this one that I'm going to issue for selling, I bought it for 100. You'll be a magician. Because when they come to the warehouse, now we mix up everything. So then we need to keep on making assumptions. Like one of the assumptions when you are valuing your stocks, when you are issuing your stocks, you can make that assumption that when I'm issuing them using the concept of first in, first out. Whatever was the oldest batch is the batch that I will be able to draw my issuing units. So the oldest batches to go. So first of all, I get units from these until I exhaust. Then I take the second oldest batch like that. It is called first in, first out. It's called first in, First out. First in, first out. I can see questions here. Yeah, politics not good for the chief ninja. Can you adopt a 24-year-old? Wambua, no. I cannot adopt a 24-year-old. I would want very young, 3-year-old, 3-year-old. And then, of course, you must be registered by, there are those bodies, Yeah. There are those bodies in this case that legitimately are able to do what here to give out children for adoption, And then, of course, I would want to adopt only boys, Only boys. I'll be able to explain later why. You'll be able to see that story, yeah. Only boys. Why? Because like now I have a ranch, At Isinya, we have a farm of cows and whatever. Yeah, I feel that we may want people who will be able to build that kind of a business to the next level. Girls are good, but I mean, with what I want to do, yeah, these are my, they will be my real children, right? They'll go to, if my son goes to Brooks school, they also attend that school. Yeah, but for the kind of business that I want them to come and do, don't tell me that whatever a girl can do, whatever a boy can do, a girl can do better. Don't tell me that. But let's first of all concentrate with this. We shall come to story time. We shall come to story time. We shall come to story time. Don't worry about that. We shall come to story time. So we are using this concept of FIFO. So this method assumes that materials issued out of inventory in the same order in which they were delivered into the inventory. It is a concept of issuing the oldest stocks out first. So we start with example one. Example one. JM Limited had the following material transactions during the month of November. So we have here date, 1st of November. We had an opening transaction here. We had 20 units, each valued at 4, etc. So then what do they want us to do? This is very, very common. They want us to calculate the closing inventory value at the end of November using FIFO method. So first of all, we draw. Yeah. So first of all, we shall come here and draw our, stores ledger card. We call it a stores ledger card. A stores ledger card. Stores ledger card. So stores ledger card, stores ledger card, stores ledger card. So we start with the date. We start with the date. Then in this case here, we shall have 3 columns. Yeah. So the first column will be for receipts. We have issues, yeah, and then we have balances. I'll teach you a very good method, Yeah, so these ones here should always be double lines. That's how a real store ledger card looks like. And then for each receipts, issues, balances, you shall have quantity. Yeah. Then we have rate. Yeah. And then we have total amount. So we have quantity, we have rate, and then we have amount. We have quantity, we have rate, and then we have amount. Yeah. So the in-between lines, they should never be double, No, single lines. And then they are normally prepared on a monthly basis. This space here, you write the name of the month. November 2025. You write like that, so that now here you'll be only writing the dates only. So let me know once you are able to draw. This stores ledger card for managing our materials. I will behave, Women can do better, Millie. Okay, great. Really great. I want cowboys. No. That's a big farm, my friend. Big farm, there'll be managers. There'll be managers. There'll be managers. Do your men prefer baby boys? No, no, no. It's not about preference. It's not about preference. I'll explain later. I'll explain later. Yeah, no boundaries, yes. In my class, you guys, all of you, of course, you are already adopted, eh? You have a father in academia. I'm your father in academia, eh? Already you are my children, all of you. So no boundaries. Feel free to ask questions. Any questions, any questions, any questions, any questions. That is why very soon I'll be organizing a bash for you. Do you remember the FR students last semester? We went for lunch to Sarova Stanley. I'm not a coward, eh? I'm not a coward. Spending Kenya shillings 4,000, 3,000 on you is never a problem to me. I'll be able to. But if you like my subject, and if you are attending more classes for management accounting, then automatically you'll be getting, in this case here, very, very soon, a complimentary voucher. Yeah, very, very soon. Very, very soon. But have you finished drawing this? Yeah, I'll be able to share the handout. No, it can't be 50,000 acres, Kennedy. I wish it was like that. It can't be 50,000. I did go. Oh, you never came, Millie. You lost an opportunity. For every pass in FR last semester. If we pass it, no. You're far away. Great, Daniel. Oh, during financial literacy training, I took them out for lunch. Tony, great. Done. Now, so we start with balance brought down. It can't be a stores ledger if you're starting from date 8. No, it will be date 1. And you don't write 1 stroke, whatever. No. It's just 1 because already month and year taken care of. So what have they told us, my good students here? What they've told us, my good students here, is this. 1st November, the opening balance was 20 at 4. So remember, balances, don't receive them. They were received last year or last month. So in this case here, you bring here, that's a balance, 20, and the rate is 4. So 20 times 4, this gives me 80. You underline like that. And then now we go to the second date. So second date, what do we have here for the second date? So for the second date, ladies and gentlemen, that person has really impressed me that Mwalimu, you want cowboys. We shall overcome. 8th November, we had something happening. 8th November, you received 140 at 4.4. So 8th November, we receive here. Quantity, 140. The rate is 4.4. Can you kindly give me 140 times 4.4 gives me what? 140 times 4.4 gives me what? 140 times 4.4. And those ninjas who are not talking at all in my class, they're not giving us numbers, they're not asking questions. Those ninjas will never ever attend any of my lunch sessions whenever I call out for them. I'll never give them any gift. No gift. Because how do you stay in a whole session of 2 hours? You're not even giving us a calculator answer. You're not even asking a question. Yeah. So from there, if I've received, I must update my balances. So this balance don't add. I've always seen students who are adding. Never add them. This is first, I forgot to mention. This is FIFO. First in, first out. Never add them. Just bring down what you had here. 24 at 80. Yeah. And then now we have another new batch of 140, 4.4. And then we have 616. So don't add, eh? You leave the batches to be like that. Don't add them. Don't ever dare add 20 plus 141. No, don't add. Leave it like that. So now how many batches do we have? The batches we have are 20 and 140. Which one is the very oldest? The one that we met in the stores, 20. Remember, FIFO is the oldest batch to go fast. Yeah, when it comes to issuing, thank you very much. So you leave it like that. Then you come straight away to this one here. So this one, you can see there's next date. Next date is 12th. So write 12th like that. What happened on this date, ladies and gentlemen? We issued 80. Issued 80. So when you come to issuing is where you have to draw the boundaries very well. We issued 80. Issued 80. So can we issue 80 at once? Remember, this is the oldest. The oldest batch has to be depleted. So under issues, this 80, I will issue it in 2 tranches. First of all, I have my oldest batch of 20, whose price is 4, total amount is 80, that goes. After 20 goes, I still have 60 to accomplish my 80. So I'll come and write this 60. Now this 60 will come from which batch? Remember, the 20 is the oldest is exhausted. Now our very oldest is this second, the one that has got 140. So it is coming from this 140. So if it's coming from this 140, so we adopt its price. We adopt its price. So it will be 60 at 4.4. So can you kindly give me this amount? 60 times 4.4 will end up giving me what figure? 264. Thank you very much. So make updates in your balances. So remember the 20 went, and out of these 140, you took 60. So then out of 140, if I took away 60, how many are left? How many are left in this 140? Yeah, so we have 80, 80, and this 80, of course, they are from this batch at 4.4. So what is 80 times 4.4? Please give me an answer, I'll write. 80 times 4.4, give me an answer, I'll write. 80 times 4.4, so my swatch is giving me 352, and that is it. That is all about this FIFO. It's about oldest stock being issued fast. There is nothing that should scare you. It's about oldest stock being issued fast. Ladies and gentlemen, what we shall do, we shall come here and go to the next one. On the 18th November, we received 100 at 4.6. I love receipts because receiving, there is no thinking, no thinking. So we have in this, I've forgotten that date. I've forgotten the date. I've forgotten the date. Sorry for that. That is the beautiful thing of being an old man. 18th year and 26 years. Yeah. So on the 18th, I really love receiving because they are 100. I'm receiving it at 4.6. So are you able to give me this? What is 100 times 4.6? What is 100 times 4.6? Yeah. 460. Very easy. So then can you tell me, of course, you can't receive and issue at the same time. No. No. So from this receipt, next will be updating of the balances. Let's update our balances. I've always seen students who are coming here to add, never add. If it's FIFO and the LIFO, never add. We only get to add when it's WAM, weighted average method, never add. So here you know that you have got this batch, 80 at 4.4, 352. And then now you have this new arrival. So new arrival at 4.6, and then we have in this case here 400 what year? 60. So that is it. So remember, ladies and gentlemen, now here, when it comes to issuing, ujue sasa hapa kuna polygamy. Wewe ni kama polygamy man. Uko na mama wangapi? Wawili. Lakini nakumbuka katika FIFO, ule wa kwanza yanaenda kwanza. Wa kwanza yanatoka kwanza. Wa kwanza. That is the concept of what you're first in, first out. All right, my good students. All right. Oops. I'm trying some abracadabra here. Yeah, that's really good. So then we have the last date. The last date, ladies and gentlemen, happens to be when? The last date, when is this last date? The very last date happens to be 26th of November. So 26th of November, we did issue. Let me see whether there is anybody who will be able to issue this correctly. And this is the last date. So we issued 140. Let me see whether there is anybody who will be able to issue 140 correctly. Let me see whether there is anybody who will be able to issue the 140 correctly. Let me see whether there is anybody who will be able to issue the 140 correctly. Abracadabra. Because the policy FIFO LIFO WAM is all about, ladies and gentlemen, issuance. The policy is all about issuance. The policy will not be applicable when you're receiving. Receiving, you receive. Diana already has done something. Diana has done something. Issue 80 first, then 60. Thank you so much. Evelyn, very good. So this 140, I know the batches, the way they are. Yeah, it is about the oldest. So I will come and issue 80 because I have 80 to be the oldest at 4.4. And then now we have, after issue 80, yeah, I have 140 in total. So I need to come and issue now 60 from the other available batch. So the available batch is this one, which is going to cost me, which had cost me 4.6. So this is 352. What is this amount? 60 times 4.6 will end up giving us what figure? 276. Do an update of your balances. So this automatically means that 80 is gone. So 60 minus 100 minus 60, that gives me 40 at 4.6, which will end up giving me what figure? 40 at 4.6, which will end up giving me 184. That is the end of that. Therefore, the closing balance, the closing stock balance will be 40 at 4.6, which is 184. That's what you write. If, for example, you had two of them, you would have said the closing is 80 at that, 100 at that, and then you add the two. The closing balance, sorry for that, the board can't be seen very well, but you can see the closing stock balance is 40 units, and each unit is worth 4.6, and the total amount will be 184. The total amount will be 184. So I can see it is already 110, ladies and gentlemen. I would want to stop there. When I come back, which will be when? The next class will be on Thursday at 3 p.m. Thursday at 3 p.m. I'll be able to show you how we do the same question using LIFO, how we do the same question using WAM, and of course, how your examiner would want to confuse you with returns. If he tells you that, we have, ladies and gentlemen, if he tells you that we have, ladies and gentlemen, goods to a return, then how do we handle that? And then the last one, what if there are breakages? There are goods in this case that were stolen. Yeah, then what do you do? Those are the only complications, and then we shall be done. We shall be done. We shall be done. We shall be done. So for the students to join RCM College for such and other wonderful presentations of these subjects, please don't hesitate to call this number. Don't hesitate to call this number. You can see we are at Great Chief Ninjas. Great Chief Ninjas. The students who are working, Joanne, remember the timetable for these special classes is Saturday and Sunday. Yeah. So Saturday, what time? Is there somebody who remembers what time we did this MA yesterday? Saturday, what time? Saturday, what time? Saturday, what time? Saturday, what time? Saturday, I don't know whether that on the Millie is okay for you. Yeah, Saturday is 4 to 6. Saturday is 4 to 6. Saturday is 4 to 6. And then Sunday, it is 12 to what year? To 2 p.m. Although today I've not gone up to 2 p.m., but of course I'll start going up to 2 p.m. Yeah. And then should you miss these sessions, now you can take care of the Thursdays. Yeah. We have another one on Thursday running from 3 p.m. Yeah. And then another one on Thursday covering the same concept from 6 p.m. From 6 p.m. Then it will be sorted out. The most important thing, ladies and gentlemen, is that you're going to do a lot. You're going to do a lot for you to be able to survive this great paper. And any new students who are around here and your friends, ensure that you make this to be a big, big, big institution. Yeah, we shall really appreciate. Make us to be biggest. That's our number. I have already enrolled. Great. Thank you so much, PC. Thank you so much. So be blessed. Let's meet at 2 p.m. 2 p.m. for what year? For financial management. Yeah, 2 p.m. for financial management. Stop recording.